So we're going to go into a trap that we find many of our clients falling into over and over and over again, and that is the rental trap. We're going to specifically talk about the dangers of long-term rentals. Like, we totally get it if you want to move here and you want to, maybe rent for a couple of months. We're just going to go down a list of all of the pitfalls of falling into that rental trap in Orange County.
Totally.
So a big trap that people fall into is they come here, they quickly find a rental because they don't want to buy right away because they feel like they don't know the area well enough. And then what happens is they kind of get settled in this neighborhood, right? And specifically if they have children, then they're like, well, I don't want to uproot my kids. And so then now their home search is fallen into a much, much smaller area. So what do you want to talk about that?
Yeah, well, we just know that moving is hard, right? We've gone through the experience of moving, not fun, so not only do you have to physically move your stuff, which honestly seems like it takes about a month between all the packing, getting the boxes, getting the movers, and it's costly, right? There's cost and time and stress associated with moving. Mm-hmm. So you try to avoid that, right? So you already have that. So you're behind the eight ball from that perspective. Second, you obviously have, like you said, certain dynamics. Like if you do have kids, then if they're settled in the school, now you're kind of like, well, I don't want to uproot them. They just got here or they've been here for a few years. Like, let's say got stuck into a rental trap. And so now I'm going to pull them into a whole different school district. Again, there's just all this negative association to moving again.
Yeah, and I would also say, because now that if you, let's say you find, a little neighborhood that you like and you want your kids to be there still, then because, inventory is so small right now. So now you really are only picking from really one or two houses, right, that you have to choose from. Whereas if you are giving yourself a wider area from which to settle, then maybe you have, maybe there's 10 houses in any given month that you could potentially buy. It's just, you're really now narrowed down and your options are very limited.
Yeah, it totally is you're stuck in a certain spot because you're going, okay, I want to be in the same neighborhood, I'm used to this. And I'll tell you one thing, Orange County is not a tough nut to crack. So I get why people would be seduced by having long-term rental because they just want to get the lay of the land. And I'm not telling you not to rent outright, from the get-go. It's just that keep it relatively short-term, at least have that option to break your lease, because all we know is that if you kind of get stuck getting renewed again to another rental, or like renewing that lease or whatever, now you're stuck for a couple of years, maybe, and then it could be, before you know it, a decade could go by. And then not only this is effectively what feels like your home, but you don't own it.
So before we continue, let's introduce ourselves. My name is Courtney Dezahd.
And I'm Sean Dezahd.
And we are licensed real estate agents here in the state of California.
Yeah, and if you're watching this channel, you might be thinking, Sean, I love California. I love Orange County. I love the glitz, the glamour, the weather. I can't wait to move out there now. But the problem is that I might be out of the area, might be out of state, maybe even out of the country. So I don't know the first thing to do. And I totally get that. That's why you want to reach out to us so we can have that call to find out specifically what you're looking for and really pinpoint that perfect property. We can put your boots on the ground, give you virtual tours, the whole 9 yards to help you find that perfect home. So what you want to do is you want to give us a call, shoot us a text, or send us an email.
Yes, that number is a cell phone, so you can call or text it. So another mistake that we see people make all the time is they decide they want to rent right away. And obviously places that you can typically rent is typically, it's initially less expensive. So they get into a neighborhood that they couldn't afford buying in, and then they get used to it. And then they're like, well, I want to stay in this neighborhood, but they can't afford it.
Yes, I see this happen all the time. People have an idea. I'm just going to throw out a round number. People may be above or below this. It kind of depends. But let's just say someone had a $10,000 budget, just as a round number for their housing expense. Well, obviously, in general, in Orange County, if you're making payments on a property, especially if you're putting, a relatively not huge down payment, rental's going to be cheaper initially because that's just kind of how rents tend to be, right? So they tend to be cheaper, so they get into more property than they really have any business being in if they were to buy it. Now they're in a home that's surrounded by maybe something that was a payment of $15,000. I'm just again, throwing out numbers, right? So they're in a much more expensive neighborhood if they were trying to intend to buy there. But now they're so used to that neighborhood, they're so used to, let's say, the nice views or whatever that neighborhood may offer. Now they're like, okay, I'm used to this. I don't want to move out of this. The problem is that this is that whole slow boil effect. You figure like a frog in a boiling in a pot of water, it gets in that slow boil, and all of a sudden that frog gets cooked, right? Because before you know it, I've seen this happen a ton of times where, again, I'm let's say I'm representing a seller. A tenant's been there for 10 years. They missed out on 10 years of appreciation. Not to say the market always goes up, but But over a 10-year period, it tends to, like, it tends to be a pretty pretty strong sample size. And then what you'll see is that these people are stuck, like, and they're completely blown out of water of whatever they could have afforded to buy. Yeah. Although they could have bought something relatively not too off of that, initially 10 years ago, let's say. But by now, they're totally gone. And in fact, now they're also stuck because let's say that landlord wants to sell. Now you're stuck in a situation where you got used to an actual like under market rental price, and now you're surveying the lay of the land now, and the rents have spiked up too. Like so now you're paying maybe like 50% less. Like let's say 25 to 50% less than what you ought to be paying market rent, and now this is a huge payment shock. And now people do have to have this by force because they got let's say the landlord gave them their notice. Now they have to actually totally readjust their living standards.
Yeah, I would say with renting, like, it's all out of your control, right? So not only are you in a market where prices tend to be going up to purchase, right? So you're missing out on that appreciation, but also the rental market is going up at the same time. So whether your rent is going up or not, because I know, some landlords, they if you're a good tenant, they like to keep you in, so they tend to keep the rent low. But like Sean said, when they finally are like, you know what, we're going to sell, or hey, we want to move back into that house, right? Like, we want that house back. Like, you're at the effect of all of that.
Yes, exactly. And you just get totally comfortable. That's the problem. You're totally comfortable. And again, that whole thing about moving is very uncomfortable. And then before you know it, that you renew that lease another year, another 5 years, whatever that might be, and then you look back, you're going, oh my gosh, like, I can't believe I could have bought something for so much less. And again, we don't have a crystal ball of the future. Rents may or may not go up over, in the future, or home prices may or may not go up. Real estate trends tend to suggest that they will, so just be aware. And again, I've seen this time and again, where the new rental value, the new rental market value is much higher than what the long-term tenants have been paying. In fact, and also what they could have bought has also left it. And again, not and this is the problem, is that people tend to use that same housing expense budget whether they're renting or buying, and of course, you're going to get comfortable in a much higher rental value of a property.
So here's another reason why people tend to be seduced by renting, is because obviously in the beginning, renting is less expensive, right? Like, you don't, you do tend to put down like a pretty significant deposit, like sometimes,
nothing compared to purchase.
But it's nothing compared to purchasing, of course. Like, it's usually at most 3 months rent, right? But obviously with purchasing, you've got a significant down payment and all this stuff. So that, I would say, people get seduced by that. You don't have that big expense. But then over time, like, the thing about buying is that payment is locked in. And that's your worst case scenario. Like, the interest rates could go down beyond that. So do you want to talk about that?
Yeah, so when we say it's locked in, obviously this is assuming that you get, let's say, a fixed rate mortgage, right? So in general, one of the only variables that's going to adjust your payment is whether or not property taxes go up. For the most part, and maybe if you have HOA dues, they may incrementally go up. Those are probably the two variables if you have a 30-year fixed mortgage, let's just say, as a pretty popular thing to do. And again, the property taxes actually rarely adjust by much because of Proposition 13. So you can almost count on your property taxes kind of staying relatively for what you bought it for. Homeowners association fees, that can adjust, but again, that's just the nature of it. You want to just do your due diligence when you're buying. Now, when you're renting, yeah, it can be cheaper initially. I mean, it will be, most likely, for sure, for like the same property. But the thing is that with rentals, like, again, it tends to increase over time. Even if the landlord's being nice, they're going to do some sort of yearly or every so often price increases on the rent. So that's going to go up. And again, the thing that's really scary is that if that landlord has to fully adjust to market rent, or you have to move out because the landlord has to do something else with that property, then you're dealing with full-blown market rent. So at least when you're buying a property and you're getting, let's say, a fixed-rate mortgage, you can count on that payment. And in fact, because we're kind of dealing with an elevated interest rate environment currently, it's very likely that in the not-too-distant future, interest rates are actually going to go down, and then you could actually potentially refinance your property and actually lower your monthly payment. So you might actually have a chance to reduce your payment in the future. Again, we don't have a crystal ball. We don't know what's going to happen necessarily in the future. But a lot of the pundits, a lot of the experts are actually, this is what they're speculating, that interest rates are going to go down. And what we always say is that you marry the home, you date the rate. So you don't have, even though if you got a loan with, let's say, a 6%, 7% interest rate or something crazy, like that you're dating that rate. Like at some point, if it drops to like 4 or whatever that might be, you have a good opportunity to refinance, and you can actually drastically reduce your monthly payment potentially.
Yeah, I mean, I honestly can't, because I worked with Sean for 9 years, and I can't tell you how many people have called him over those 9 years, and then they decide for whatever reason they don't want to buy, you know, they want to rent first, they're waiting for prices to go down, and they have just been completely priced out of the market. Like,
oh, yeah.
They've had to, honestly, many of them had to leave California because it's just, they just got into that rental trap and they never, like, got into the buying game. Whether or not it goes up or down, like, in the short term, like, over these last 9 years, it has just been insane, and they just completely got, you know, they got priced out.
Yeah, like literally they could have bought, let's say, a 3-bedroom detached single-family home, you know, at like years ago, and then all of a sudden their budget now affords them maybe a 1 or 2-bedroom condo.
Yeah.
Like that's how dramatic some of these things can be. So sadly, like a lot of people do get priced out if, again, they don't strike while the iron's hot.
I mean, I think people, they tend to listen to, like, the really, really negative pundits, like, you know, prices are going to crash, prices are going to go down, and who knows, like, they could be right. But that's the future. No one can predict the future. All you can go based on is what you can buy right now, and is that payment comfortable for you? So you really got to ask yourself that question, like, do you want to run the risk of, well, the market just keeps going up, going up, going up, and then you lost your chance?
Yeah, and also remember, we are not telling you to speculate and stretch your budget to an uncomfortable level.
Yeah.
That's nothing we ever tell you to do. We want to make sure you're comfortable with whatever your payment is and finding you, let's say, a home that fits within that budget. So we're by no means wanting you to get in over your head. So it's just making responsible decisions and getting some dirt, you know, like owning a piece of this land. So at least in that sometime in the future, you can always, you know, again, what the good thing is that maybe you don't get that, your dream home right off the bat. You scale it back, you get something that's more modest, that makes sense for your budget right now. And then, again, the good news is that if the properties do appreciate, while your dream home did appreciate possibly, so did what you bought. So at least you got something. But if you went to a rental, you got nothing. I mean, they did, you know, like, what happened to your money?
Yeah, you have none of that equity, right?
Yeah.
I mean, people can tending. I mean, obviously we're going off of historic trends. Like Sean said, we can't predict the future, but people, what they tend to do is if they got into the real estate market, you know, they take that equity and they put it into that bigger home that they is their dream home, really. So then let's talk about some of the tax benefits that you're also missing out on if you fall into the rental trap. I mean, obviously we're not accountants. Obviously talk to your accountant, but just generally speaking, like, what are the overall tax benefits that you will be missing out on if you find yourself in the rental trap and you're renting for the next 10 years?
Yeah, some of the major ones that people like talk about for like, well, actually, there's probably 3 major components, right? So one is your interest payment deduction. So basically, whatever interest you paid in that given year, that's tax deductible, which is very nice and helpful because that can be rather significant. And then second is property tax. So basically, whatever property tax you paid is also tax deductible. So those are things that are, you know, and again, there's all little caveats. I don't want to tell you all the fine details because that's what
and nooks and crannies. Yes, again, we're not accountants. We're just telling you general.
We're just like general.
Talk to your accountant. Talk to your accountant.
And it's big. So the third big thing is basically potentially capital gains exemption. So if as a general rule of thumb, if this is your primary residence and you've owned it for at least 2 years, and it's been your primary residence for 2 years, like whatever appreciation, whatever equity you built in that property, that's potentially tax-free money. So the general rule of thumb is that if it's a single person owning it, it's basically about $250,000 of capital gains exemptions, and if there's 2 people that own it, it's about $500,000. So literally you could make, you know, your property could go up $500,000 of net. You know, we're not talking about, you know, you minus your closing costs, so your net in your pocket after selling that property. Basically, $500,000 of that is exempt from capital gains, which is huge, and this applies to federal and state. So again, who gets, you know, that's pretty nice to make $500,000 not paying a dime.
Yeah, I mean, a good friend of mine, so she's in San Diego, so we didn't, you know, help her with her real estate or anything like that, but she's a really good friend. So they're thinking about selling their house and sadly moving out of state, like so many people, moving back to Utah. But she didn't know this, right? Because most of it, like, I think sometimes when we do these videos, we forget how much people just don't know about the nitty-gritty of the real estate market because we're in it.
Yeah, they're not in it like we are.
Yeah, like we're in it every day, so sometimes like we make assumptions like, oh, everyone knows this when not everyone does. And she was blown away. She's like, wait, because they have about $300,000 in equity. She's like, wait, that's tax-free? And I'm like, yeah, you up to $500,000. And she was like like blown away and just like almost like crying that
Yeah, that's what mine
they made like that much, and they can use that to their their dream home that she's been wanting. Like finally she got her husband to do it. He's born and raised Southern California. He didn't want to leave, but
yes. I mean, and also, and this is actually a semi-related topic is that let's say you buy that property and you ultimately at some point turn it into a rental, right, an investment property, and then you decide to sell it. Now there's a thing called a 1031 exchange where you could, what they call defer your taxes. So you don't have to pay Uncle Sam right off the bat when you sell it. You're shifting that tax basis to your next investment property. There's a whole host of rules about that, but there's ways to shelter. So there's so many benefits to owning real estate that it's incredible as opposed to renting where there's very minimal.
Yeah, just some of the long-term clients that, we've become friends with over the years. I mean, I look at their real estate portfolio and just how over time, just over the last
picking up one more.
30 or 40 years, they're not like, starting out as billionaires or anything.
And making tons of income.
Yeah. And just over time, they're slowly collecting property, and now they are literally set, like their children are set, like they have so much assets. Yeah, they have so much assets that they've just over time because they bought that first property, like they got that stake.
And then they were able to, let's say, roll those, let's say some of those investment properties into something bigger that's actually getting a better return on investment. So there's so many different things you could do with real estate. Again, to hammer home the point, it's really an amazing idea to own property as soon as reasonably possible.
Yeah, I mean, even just going back, like, because we lived through the 2008 crash, and I remember at the time, like, thinking, like, all of these idiots, including us, that bought property while it was plummeting, But it's like, over the years, like, it hasn't even made it, like, people still have, like, it's still gone up. Like, it was still a good decision for us. It actually was what allowed me to quit my job and get into real estate with Sean, because we had a property that, even though we bought it at the wrong time, when we sold it, it had equity, and that was, like, my salary for the first year. Like, so, yeah, just, it's so hard to time the market, and we're just trying to stress, like, if you can get in, like, seriously consider is it the right decision for you? So I guess the point is, John, like, so what are you saying? So if somebody is coming from out of state or out of the country, they don't know Orange County at all, are you saying that they should just buy right away, even if it's like they don't know the neighborhood or anything?
Sight unseen, just do it. Just throw a dart where you want to go on the Orange County map, and we'll find you a property, and you're good. No, what I'm saying is that have your options open. I'm just saying, what some people do is they just get into, let's say, a short-term rental. You could get into an Airbnb for like a monthly rental, maybe go to 1 or 2 or 3 different Airbnbs possibly, so you get a lay of land in different locations. And honestly, or get, like, let's say, just a short-term rental or corporate. Like a lot of times these relocation situations, like your company will pay for, like, let's say, first couple months of your temporary housing. Or even, let's say you do get into something of a long-term rental, but it has a minimal cost to break the lease, right? So you just want to have flexibility, because I would hate for you to get here, decide like you like it, but you're kind of stuck, and you're like, oh, I'll wait till the end of my lease. And then what we saw even this last year, right? Yeah. The home prices didn't necessarily even drop. Like, even with the interest rates moving as they did, they did, let's say, drop a bit off of the peak, the peak that happened last spring. But a lot of that's recovered to an extent, and also the problem is now interest rates kind of doubled. So that payment is way higher than it was even a year ago, right? So that's where I'm going, have your flexibility. So as soon as you're here, like, let's say, just have a game plan, let's say, for the next 3 to 6 months to really understand Orange County, understand the pockets you want to be in, and then we're like just laser focused on those areas that you decide to, really want to like purchase in, and then we'll just, we'll find that property for you, because I just would hate for you to kind of be here again. In this world right now, 1 year is an eternity. Yeah. So many things are changing on a year-to-year basis that what you can count on is what you can afford today. Okay, good. You know what you can afford today. Let's work with that. We'll work with that budget to get you into something. Because again, it seems like, at least the way the interest rates are, you're dating the rate situation where you're paying an elevated monthly payment, but hopefully that should come down at some point in the not too distant future. I just would hate for you to be in a situation where you're stuck in a lease and you don't want to break it because you're comfortable and all that stuff, and you're in an area that you're, again, that now you shouldn't be in, but basically you're paying a monthly payment that's not conducive to owning something in that area. And so now you're going to be downgrading in your mind like that other, like to get something to actually buy. So I just would hate for you to just get here. Orange County is not a tough nut to crack. You'll find out everything you need to know about Orange County in the pockets that you're interested in really quickly. We're not like a huge metropolitan area where there's all these little nooks and crannies and like you're going, I don't understand this area, this street to that street. Orange County is pretty, it gets more ritzy and it gets less ritzy. I mean, there's this gradual ritziness curve or whatever. It's really not tough to figure out what makes sense especially once you're here. And remember, we are licensed realtors here in the state of California. So as much as we love making these videos, what we love more is to help you with your real estate needs. Whether you're looking to buy or sell a home, what you want to do is you want to give us a call, shoot us a text, or send us an email.
Or you can reach out to us via WhatsApp. However you want to get a hold of us, we've got your back.